What's up, everyone? It's Scotty with MoneyVest. So this is going to be your inflation update. So CPI numbers are going to be scheduled to be released later this week on Thursday. So Thursday is when the next CPI report basically comes out. So I'm going to break down exactly what the expectations are from the market. So they're scheduled to be released on January 11th. So that again is indeed going to be a Thursday at, of course, 8:30 a.m. Eastern. I will be live to cover those numbers, of course, and in this video, my goal is to break down the expectations, the consensus, and some of the other indicators to make sure that we understand and are watching for ahead of that CPI print and what the market's reaction may look like once the numbers come out. As always, if you enjoyed this video, find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. Links to our Discord and Patreon is going to be down below if you're interested in joining and, of course, getting access to all the members-only private videos. And, of course, I've opened up a couple more spots for the month of January 2024 for the New Year's with that investor tier early bird and the annual discount that's available with that 16% discount. Link's going to be down below if you're interested in joining. Of course, getting access to all the members-only videos and, of course, buy and sell alerts, options alerts, and trade ideas included with the link down below. So this right here is going to be the consensus. So for CPI, which again is going to be released on January 11th for the month of December, consensus month over month is 0.2%. And for year over year, we're sitting at 3.2%. That's the headline CPI, which of course has seen a significant decline from well over 9% from last year. And ex food and energy, which is core CPI, we're looking at a 0.2% month over month and 3.8% year over year. Now, this is still pretty elevated. So core CPI, of course, is the main indicator that the Federal Reserve is watching for. That's the Fed's preferred measure of inflation. Of course, it's come down from 4%. The expectations are 3.8% as well. Now, gas prices have been coming down. So, of course, the current average and just a week ago average was $3.10 compared to 1 month ago, which was $3.16. So we have seen a little bit of that stabilization in the overall prices for gasoline. And if you come over to U.S. oil, which again is crude oil prices over in the U.S., if you go over to the monthly chart, we did see in the month of December, I think the prices were more or less flat. We didn't really see a lot of momentum lower. So in the month of December, crude oil prices were slightly down about 5.5%. So there is a possibility that we do see that being reflected in the CPI report, in the inflation report that does come out here in just a few days. Now going over to the rent index, which is going to be the rent over in the US, we have not really seen rents come down because even if you come over to the actual report, you'll notice that shelter prices, which is all the way down here, is still up 6.5% on a year-over-year basis. Not to mention month over month, in the month of November, shelter was up 0.4% once again. So we haven't really seen any type of deflation in rents. Shelters is going to be the biggest wild card because it does make up for over 30% of overall inflation, overall CPI. So that is definitely something to keep in mind because that is going to be a big driver for where inflation ends up going. Now, when it comes to, again, the rent apartmentlisting.com, we have seen rents for 4 to 5 consecutive months dropping. And in the month of December, they believe that U.S. rents fell 0.8% in December of 2023, which again, we'll find out whether that's being reflected in the actual report or not. And it's down 1% year over year, according to apartmentlisting.com as well. Now, if you come over to the overall inflation, of course, we have seen a very significant growth. I mean, prices have decreased in that rate of growth. Okay, so it's a very, very interesting concept. When people say that inflation is down, inflation is lower, and it's approaching the Fed's target, all they're saying is the rate of growth for the price increases is going down. It's not the price is going down, it's the rate of increase that is slowing down. Because if you really just go over to the CPI price index, you just type in what I just typed in, consumer price index, Google data, and you click on this first link that pops up. This is going to be the actual consumer price index according to the Bureau of Labor Statistics, and you come over to the actual CPI, which is the price index since 1915. And what you'll notice here is that prices have just been increasing. This is, again, a consumer price index that's the collective goods and services, like a basket of goods and services, and all we have seen is increase in prices over the years. And this right here, since October and June of 2020, you can see such a massive move in overall prices. If I zoom in a little bit, you'll notice such a parabolic move in overall prices ever since, of course, the quantitative easing measures and the interest rates were dropped back down to zero. And of course, we have seen a little bit of that normalization now. So maybe now there is some potential sideways action, or we are seeing prices kind of stabilize a little bit. If this start going down, that's really what we're looking for from a deflation standpoint. That's what's going to help the consumers, considering that the savings rate is still low. People are still taking on too much debt to finance their lifestyle, finance their spending, and prices continue to be really, really elevated. So that is really the whole idea, is that yes, inflation is down from its highs of 2022 from back in June, 9.1%. It is down to 3.1. That's a good thing. But at the same time, we have to understand that this is the rate of increase, not the price itself. Now, energy, on the other hand, is in straight up deflation. It has been up over 41% year over year. Then it started to decline. At one point, it was down over 16% year over year. So it was in straight up deflation. Then, of course, increasing once again, and right now still negative right now. Shelter prices, on the other hand, are somewhat stabilizing, and they have been rolling over, which is a good thing. So we have seen a peak of over 8.2% in March, and now we're starting to see a little bit of lower, 6.5%, which is still an increase year over year. But, of course, shelter prices are still increasing, right? On a year-over-year basis, they're still pretty elevated. We're not seeing rents go down at the moment. And finally, I wanted to go over used car prices and new vehicles and apparel, some of the other stuff as well. So new vehicles, you'll notice, are approaching that deflation zone. So right now, they're still up 1.3% on a year-over-year basis. Of course, the moment it crosses below the 0% level, we're looking at some deflation. And then finally, food has also been trending lower, which is good. It peaked out back in August of 22 at over 11.4%, and now it's on its straight line down, just only 3% increase on a year-over-year basis, very close to that 0% line. And we are expecting some potential deflation very soon when it comes to food prices. So when it comes to the market overall, here are, of course, the expectations going into Thursday. And when it comes to the market's reaction, this, I believe, is, of course, going to be the most bearish outcome, which is just a hotter print than what the expectations are. So if core CPI comes in above 3.8, headline CPI comes in above 3.2, both core and headline come in above the consensus for month over month, of course, the markets can see a little bit of that negative reaction. That can, of course, be a little bit more bearish for the market if we come in hotter than what the expectations are, because plain and simple, a much hotter print on CPI is going to reiterate or sort of create that dilemma from the market whether the Federal Reserve is going to be interested in cutting rates or not. Because right now, the main goal for the Federal Reserve is to bring inflation down. And if that doesn't come down fast enough and the economy continues to be strong, well, guess what? The Federal Reserve is going to be more inclined to keep rates steady because the economy can handle it. Unemployment's low, economic growth is strong, and inflation is still elevated above the Fed's target. So if this doesn't come down, if it continues to be elevated, if it continues to be hot, then that is a reason for the markets to maybe pull back on potential expectations that maybe the Federal Reserve is not going to cut rates 6 or 7 times as what the market's pricing in right now. If we come in line with expectations, so this is basically kind of in line with what the consensus is, I believe the market's going to be somewhat flat, could be slightly higher with a bullish positive catalyst, considering that, okay, inflation is coming down from a previous number, so that 3.8% is still lower than where we are at the moment. That 3.2 is, I think, down from 3.3, and core CPI and headline CPI only increasing 0.2%. So that can maybe lead to somewhat of a minor rally for the market in hopes that, okay, the Federal Reserve can potentially cut rates 6 to 7 times, right? Kind of reiterating that idea for a soft landing. And the most bullish scenario, the most positive scenario where the markets could absolutely rip higher is, of course, if we see a much better print on inflation, core CPI coming in less than 3.8, headline CPI coming in less than 3.2, and we see, almost flat to a negative number on a month-over-month basis. The best scenario would be these two numbers being negative, meaning prices are going down. We're seeing some levels of deflation on a month-over-month basis for overall prices for core CPI and headline. So that, of course, is going to be the most bullish catalyst for the markets going into Thursday. So let me know your thoughts down in the comment section below. Again, considering how aggressively we are seeing prices roll over, I would really just be looking at somewhat neutral to a little bit of bullish catalyst here going into this inflation print, but you just never know. Shelter is always going to be a wild card. Rents, which basically control over a third of inflation, is always going to be a little bit of a wild card for the markets. But I do believe and expect somewhat of a neutral to a bullish reaction from the market going into Thursday for this inflation print. So let me know in the comment section below, what do you think? As always, if you enjoyed this video, found it helpful, make sure that you drop a like, subscribe to the channel. If you're just joining us for the first time, again, links to our Discord and Patreon is going to be down below if you're interested in joining. 16% annual discount that's available until a couple more days. You can take advantage of that. Buy and sell alerts, options alerts, trade ideas, members only videos, everything's going to be included as part of your subscription. And as always, happy investing, and I'll see you all in the next video.